We'll go into more detail about why Tesla is a risky investment in today's video. Experts have highlighted why, despite the general consensus that Tesla CEO Elon Musk is incapable of doing what he is doing, the company's stock has consistently seen growth. Currently, only roughly 3 of shares are held short. Borrowing shares from other investors is necessary for short selling. After that, the shares can be sold by the other party, but the short seller will need to buy the shares back later and return them to the original lender. This essentially indicates that a large number of individuals are betting against Tesla, and for good reason. Why is Tesla a risky investment? Why are bettors opposing the brand of electric vehicles? To find out, keep watching. Although Elon Musk, the CEO of Tesla, has called the company a technology firm for a long time, it is still a manufacturer. Manufacturers depend on supply chains, and these chains are being disrupted globally. Both war and pandemics are essentially disruptive occurrences that hurt economies and other living things as a whole. However, others claim that Tesla is dangerously close to failing. It is true that scaling is difficult, particularly for this kind of firm. It doesn't get any easier after the first scale, at least not for cars. Furthermore, the electric vehicle police have been pursuing Tesla for years and are drawing nearer. Tesla-like electric vehicles are being produced by Rivian and Lucid Group. Ford Motor Company has followed suit, and Volkswagen is also producing more of them. Chinese companies are now able to thrive without as much help from the government. In order to justify its current price, experts predict that Tesla must expand faster in the coming years than either General Motors or Ford. The opening of its Gigafactory in Austin will be advantageous to it. But given the time and effort required to expand output, it's a little unlikely that the 83 rise in car deliveries from the previous year will happen again. Most optimistic forecasts start with the assumption that Tesla, like Apple, will increase the value of every sale by adding value to its software, electricity, services, and insurance. Cars still make up roughly 90% of Tesla's revenue, though. Moreover, Tesla does not produce solar panels. Its earnings from battery storage fell by 38% 2021. That is not to say Tesla hasn't been successful, quite the contrary. However, the stock price is based on the assumption that it can maintain its current growth rate even in the event that manufacture of electric vehicles picks up speed elsewhere. We witnessed this with cloud stocks last year. There is a limit to how much people are ready to pay for growth. It appears that, Tesla broke through that barrier quite quickly. This is not to suggest that Tesla is a bad company. In fact, we think it can profitably grow its top line by 50 years after it, though. Growth can be sluggish since large numbers are harder to adjust. Consequently, the income diversification that Tesla had previously promised isn't happening. You're still looking at a big drop in the stock price, even if you assume that Tesla's value is worth 10 times its present revenue, or that its profit can treble and it's worth 30 times that. Contributor to Fool.com. Connor Allen looked into what's truly driving the stratospheric value of the electric car firm. His conclusions are well-founded, if a little suspicious. Connor says that when comparing the two, Netflix is a great analogy, which is consistent with our earlier arguments. Netflix would have to find another business model if it continued to focus only on streaming, as their stock would probably keep declining. Nevertheless, when it comes to automobiles, Tesla is the most overvalued firm in global history. What is the estimated value of all the other things they are doing? Some contend that despite all of this potential, Tesla is still inexpensive. Connor is mostly correct when he states that he will believe it when he sees it. The majority of optimistic forecasts for the company's stock price are predicated on anticipated future developments. Consider all the new technologies that Elon Musk talks about. Both Elon and Tesla have a history of exaggerating things, which is consistent with the brand. Consider FSD and the Cybertruck as an example. If you frequent this channel, though, you're aware of our more upbeat perspective. Therefore, even though investing in Tesla stock is risky, we think it will and has produced significant returns. At the time this movie was filmed, Tesla's market worth was $900 billion, and the company had generated $53.08 billion in revenue over the previous 2 years. Experts usually think of Tesla as an expensive investment, but we think that when gas prices keep rising, people's perceptions will change. Given that Russia has produced the most gasoline essential crude oil during the war, gas prices are probably going to stay high for a lot longer than expected. Naturally, Tesla vehicles are pricey, but gas costs are rising over time. Gas prices have been particularly problematic for Americans who live in rural portions of the country where cars are almost a need. In the long run, Tesla cars might be more affordable for consumers if petrol costs don't decline. Traditional analysis suggests that Tesla is still overpriced, but market capitalization represents more than simply the company's earnings. Tesla has increased even though it has been essentially overpriced for almost 10 years. To put it briefly, it seems that traditional metrics do not work for Tesla. In addition, Tesla has experienced outstanding revenue growth, and the firm is gradually narrowing the difference between its market capitalization and revenue. Do we think Tesla is a risky investment then? In a big way, it's crucial to remember that the market is still very erratic. There's little question that Tesla and the rest of the market will plunge if the present state of affairs in the world leads to a recession. Recessions can bring down gas prices as they did in 2008. Short-term investments in Tesla stock are risky due to market uncertainties, but even in the case of a recession, we continue to believe that Tesla will eventually recover. Rising gas prices and record sales will undoubtedly push the stock to reverse course if a recession does not occur soon. Given Tesla's recent quick growth and the global shift in governments toward renewable energy, it is realistic to anticipate a rise in the company's valuation. The company started production and distribution from its Texas factory in April after starting manufacturing and delivery from its Berlin Gigafactory in March. The two new plants will ease the burden on Tesla's Shanghai site, enabling the business to handle supply chain problems and the global shortage of semiconductor materials and batteries more skillfully than its rivals. During a recent investor presentation, Tesla declared that it has started shipping model a crossover SUVs from its plants in Texas and Germany. The company is also working to bring battery cell production in-house, diversify its supply chain, and improve its procurement procedure. This has led to a streamlining of the Model I structure. The new production technology used exact factory. Comparing the Model I to the existing Model 3, Tesla has significantly increased the Model I structure and removed over 1,600 welds. On its earnings call, Tesla described the enhancements in further detail. They added that because they have learned so much, they should be able to build up manufacturing in Texas and Berlin more quickly than they could in Shanghai. Among the first businesses to really consider electric vehicles was Tesla. Up until this point, Tesla has largely dominated the electric vehicle market with very little deviation from its primary rivals. In addition, Tesla has some of the best self-driving technologies available, together with some of the least expensive maintenance costs of any vehicle. Despite what some may believe, they're essentially charging more for user-friendliness in electric vehicles, much as Apple did with phones. Long-term rivals of Tesla will undoubtedly catch up, but considering its appeal, the company will still account for a sizable portion of sales of electric vehicles. It's also important to remember that Tesla produces a range of income-generating energy products, including solar roofs and storage or charging systems. Tesla is not merely a maker of electric vehicles. The transition of the world to renewable energy sources will undoubtedly help them. We believe there is significant long-term profit potential in the stock. Large trades in the current volatile market should be avoided in the short term as they remain highly risky. Therefore, we believe that large sums of money should not be used by anyone wishing to purchase Tesla shares. To sum up, we think Tesla will last a long time, but there's a chance the business won't live up to our expectations. However, as they say, the stakes are higher and the rewards are higher. Do you have a bet on Tesla or against it? Please leave a comment below.